So welcome to Numbers Therapy, episode 37. Today's episode titled Blur and the Rise of Marketplace Competition. Purpose of Numbers Therapy, of course, to talk through macroeconomic, operational, financial, technical, trading-based, and other dimensions of Web3. We're putting the pieces in place to help everyone understand the latest picture and continue to evaluate while also hearing some incredible backstories and having some good laughs along the way. For anyone who's in the live audience, this is, of course, for all levels. So if you have any questions whatsoever, simple questions, terminology, acronyms, please drop them in. If you have more advanced questions, also drop them in the chat. I'll make sure they get answered along the way. Lastly, Numbers Therapy is rated NFA, not financial advice, as in none of what you hear in here is financial advice. So without further ado, and on to today's guest and episode. From 2021 to 2022, in our favorite field of Web3, we were interacting with primarily one marketplace, name shall not be named. And while this marketplace was no doubt crucial to the growth we all wanted to be a part of, as time unfolded and user counts rose, we began to see cracks in the system, missing features, slow progress, and beyond. From 2022 on, we saw numerous entrants try to break through with varying levels of success. And lately, we found ourselves with more of a super app, one solution that could solve the various needs and use cases in NFT land, please the flippers, the snipers, the bulkers, and beyond. And so today's guest will for sure garner a warm welcome, helping bring development to our space and really cater to what the market wanted. He certainly has a good amount to share about his ride and philosophies as it relates to his project and beyond. He certainly also has the vision for the impending future of Web3, including a very special Valentine's Day milestone coming up. Very excited to have him on today and have him as a contact and friend, and so that we can all walk through together the story of his project. Please, everyone, welcome Pacman to the stage. Everyone, Pacman, how are you doing today?
I'm good, sir. Very excited to chat with you all.
Amazing, amazing. I think I join others in saying we're really excited to have you. I'm certainly really excited to have you. So definitely going to be a great episode. Let's maybe start first with a little bit of your background. If you could just walk everyone through however you feel comfortable, pre-rise of Web3, what were you doing, where your focus, just to be able to frame up for everyone.
Yeah, totally. Would it be helpful for me to just kind of give like a quick intro on myself?
Yeah, that's absolutely perfect.
Perfect. Yeah, so, prior to starting Blur, I originally got my start as an engineer in Silicon Valley around 8 years ago. So it was an engineer, and then I did that for about a year and went and started my first company after about a year of that. Went through Y Combinator in their Winter 16 batch. And after doing that, I really wanted to go to college, ended up going to MIT, studied math with computer science there, and met Galaga, my co-founder. And basically, it just kind of throughout my career, just been building projects throughout the years. Galaga and I, we worked on numerous side projects. We just really enjoyed working with each other. We ended up going from MIT to starting our first business back in 2018. It was in the crypto space, but on a small niche blockchain. And we ran that business for around 3 years and sold it at the end of 2021. And we started working on Blur immediately afterwards, like literally the day after selling the business. And the reason why is because in 2021, as we were selling the business, I personally got really into NFTs. I minted a blip map as my first NFT. Actually, an acquaintance of mine, IRL, was working on it and shared in like a group DM, like, hey, I worked on this project. Someone should mint this. So I minted it and held it and, ran it all the way up, sold it around the peak. And I was just absolutely hooked after that. I was so excited about the space. There was just so much energy in it. I really fell in love with the trading aspect of NFTs. I just found it so fun, but I was very frustrated with the existing infrastructure. OpenSea and all the other marketplaces, they treated NFTs like a retail shopping experience, when what I wanted was something that was more of like a professional exchange for NFTs, really something akin to effectively Binance for NFTs. So that's really exactly what we set out to build at Blur.
That makes total sense. And so thank you for all that background, first off. I think it really, really frames it well. So with that background in mind, obviously you were excited by it. When you first got into NFTs, Did it take a little bit of absorption to figure out, what was going on here and why people were buying NFTs? Like, did you immediately, was it just a natural reaction where you're like, oh yeah, duh, this should be happening? Like, where was your initial head when you started?
Yeah, totally. Actually, it wasn't really hard to get on board with it at all because our prior business, we built many aspects of Blur, of what Blur is. There's some of that DNA was in our prior business. We had to build our own spot exchange, for example. It was like a Coinbase Pro style spot exchange. It was very, very niche, so most people wouldn't have been familiar with it, but we had built this, real-time trading platform before. And then we also had a marketplace for the native assets in that business. And so encountering NFTs was something that it wasn't really like a big stretch because ultimately it was like, oh, this is very similar to something that we've already worked on, except this is much bigger. There's so much more energy involved, so many more users. It was just the market opportunity was incredibly exciting, and you could just feel the energy from everyone, both on chain and on Twitter, like anywhere you go, right? Like NFTs were everywhere, even on billboard ads and everything like that. So it was just like very clear that was where the energy was. So it actually wasn't even like a stretch to kind of get on board. It was something that we were already quite familiar with in terms of the value of digital assets.
Yeah. Okay. That makes total sense. So you started messing around, you started trading, and of course your thesis was quite clear, right? Like you wanted something industrial level that had analytics or functionality, from a UX standpoint that could cater to the actual needs of traders. And it wasn't just like this loose marketplace, that kind of a thing. And you want to integrate it. What was your initial experience though? Like you sitting there trading originally with OpenSea, for instance, or whatever else you tried along the way, like what were you experiencing then? Were you just, was it just super slow for you? Were you looking at particular features within the feature set and what was missing? Were you also melding that with other tools? Like what was your day-to-day user experience like?
Yeah, totally. I think a lot of it was just when you look at OpenSea or, pretty much any other marketplace, NFT marketplace prior to Blur, they really just treated NFTs as a fairly typical shopping experience. And the UX of a shopping experience is well developed at this point, right? Every shopping site is the same format. You have the filters on the left, and then you have your items on the right, usually in a grid view, some information about them, and then you can click in, and then you can buy the item. Maybe you can add it to the cart, right? That's just like copy paste, like the default experience. But when it comes to trading, there's also an optimal experience, right? If you look at Coinbase Pro, I guess they changed it to Coinbase Advanced, but what used to be Coinbase Pro, if you look at Binance, if you look at FTX, BitMEX, there's a very clear difference in terms of the UX. You really want to get a real-time order book. You want to be able to see much more market data, listings and sales as they come in. All of that information is a very different experience than shopping. So that was what I really wanted when I was trading NFTs myself. Nowadays, I don't get to trade NFTs so much. I'll only buy things just to test out functionality really at this point. But really what I wanted was something that was more akin to, that Binance experience or BitMEX experience. I wanted to have all the data at my fingertips. I wanted to be able to execute in size very quickly. When you use any of the other marketplaces prior to Blur, bulk actions was incredibly difficult. People were downloading extensions. I would never download any of the Chrome extensions just because in general, there's a very easy way to get hacked. So, and they did not look like they were built by teams that kind of were super legit, to say the least. So I knew that people were using this, and that just kind of showed to me, wow, there is such a need here where I experienced this problem myself. And then also people are literally downloading the sketchiest Chrome extensions I've ever seen that can like overwrite data on their website as they're buying, JPEGs worth thousands of dollars. So it was very obvious that there was a huge market gap. It was very surprising to us that it didn't seem like the existing players in the market really internalized that. I don't quite know why. I think a lot of it is just, when there's such a new space with so few players, the market is highly inefficient. And that's why I think you've seen a lot of the, prior top players in the space kind of just like get the philosophy of the space wrong, just because there wasn't enough people in the space to kind of reach that market efficiency from a, philosophical like product understanding perspective.
After which point they were just stuck, is I guess what you're kind of saying there is the lead on, right? So they have their interface already at that point. So to be able to do a 180 and then cater appropriately, not have like the shopping cart experience like you're talking about with a bigger team, et cetera, just maybe too tough to mobilize at that point and too risky.
Yeah, I think it's quite difficult to kind of shift philosophies. And I also think, you know, in terms of market segmentation, there's really only two that make sense for any sort of market. Like if you look at crypto, right, it's just retail and pro, right? Coinbase is incredibly dominant amongst retail, and then Binance is dominant amongst pro. Of course, there are like regional exchanges, but it's really that segmentation that has been the most durable. And of course, you know, when you look at the volumes, it's like Binance is a much larger business than Coinbase. So it's like the retail business can be very, very large, but the pro segmentation is actually where the opportunity is, and it's also where NFTs are trending. But I think it's very difficult to actually build, if you're building a retail product, it's very difficult to actually shift that. Both in terms of like how the team thinks about things, how you think about go to market, even just like spacing, you know, the spacing of the product is very retail. Users typically prefer a lot of white space, for example, right? Like every good retail UI is like has very little information on the screen at a single point in time. A lot of spacing is very comfortable to consume. Whereas if you go on Blur, it's like it's almost overwhelming with how much data is shown and how little space there is in the UI. And that's just because you're fundamentally building for different audiences. So I think there's, you know, not to knock on like the prior players, I think is really just like these are fundamentally different businesses, and so I think that was why it's hard to just kind of like do a complete 180 on your existing business.
Yeah, and that segmentation makes sense. What's super funny about what you're saying too is it's like almost akin to having a shopping experience for whatever product you normally buy, and we don't have like fast moving dynamic pricing that exists. So like the need, right, for the buyer in those other cases, like you don't need to like hurry to be able to buy, you know, your yogurt, right? Like the price is staying there. It's not going anywhere, right? But in this case, like the needs are 1,000% different. So to design it around an old experience that doesn't at all suit is just mind blowing when you say it that way.
Yeah, 100%. And that's not to say that, you know, like there will be retail driven waves in the future. Right, like every bull and bear market, the market operates in cycles, and we know that the pro market is going to grow, but it's not like retail is not going to come back. Like retail will come back again, and they'll probably prefer a shopping experience. You know, it's probably better for them to be able to have a shopping cart, and maybe they even want to buy with their debit card or their credit card, and maybe you even want to abstract away the entire concept of a wallet. But that's a very different audience again than a pro trader, where they're intimately familiar with, you know, how this entire system works. They, you know, are self-custodying. They worry about gas, right? They want to optimize the gas costs. You know, so many different things. It's just like a fundamentally different experience.
Yeah, totally. That makes sense. Okay, so you played with all the tools. You messed around. Very clear what your thesis was at that point. How did you mobilize your team at that point? What was that like? Did you already have people waiting there, you know, to work with you, your existing team? Did you have to add people? Like, what was that thought process and structure like? Who was part of your team? That kind of a thing.
Yeah, totally. So for context, we basically sold our business at the end of, you know, literally like Christmas Day, 2021. We started working on Blur the day after. We raised immediately an $11 million seed round from Paradigm. And then we started working basically mid-January was when we started building Blur. And we've been building for 388 days now. You know, in that time period, we built up a team of 10 or 7 engineers, a designer, a chief of staff, and myself. Our engineers primarily come from trading and systems backgrounds because we knew that we needed to build a high performance, high reliability, real-time trading system. We were very fortunate because many of our friends at MIT, it's very common for them to actually go on and work at trading firms after school, right? They'll work at, you know, Jane Street, Citadel, you know, pretty much like every market making firm out there. So we had a pretty good network to pull from in terms of people that, and these are typically the engineers that are kind of just the best of breed, just like globally across any market, because when you're building a real-time trading system in TradFi, it's like the competition is so immense It's incredibly difficult. So we had a really good pool to pull from. So we were fortunately able to recruit, from our MIT network. Engineers worked on the trading systems. One's from Citadel, one's from Five Rings Capital. Our smart contract engineer, also through our network, was previously working with Starkware and MakerDAO on their DAI bridge. And then even our designer was someone that I had worked with way back in the day. And it was very fortuitous because he was previously a design director at Brex and before that at Square. So we just had a network that was very relevant to the business that we were building. And it was actually quite easy to pull together a team to build what we needed to build at Blur. And we also knew that it was a team that did not exist in the space prior to Blur, right? Because if you think about all the existing marketplaces, if you're building a shopping experience, the team that you need for that is going to be very different than if you're building, high performance real time trading system. So there, I think we got to a certain extent lucky that it was just like such a good fit for our own skill set and the skill set of people in our network.
Yeah, that makes sense. I mean, it seems like it was deliberate and calculated. So I appreciate you saying lucky, but it seems all intentional on that front. But it's very cool to hear that story. So early on, then you start developing. Of course, you're probably going into some version of iterative customer feedbacky phases. You have an audience here, of course, live right now. Many of whom are going to listen afterwards as well on the recorded version of this. That I know were some of the biggest super fans and maybe beta users and those folks early on. So I know the MVHQ crowd certainly played in a good portion to getting that user feedback and kind of being able to react so you can mold and things like that. How important is it to have a group like MVHQ or a beta group in general? Would you say in general, and then even specifically for this project as you were evolving it, how important was that?
Yeah, totally. I think really in this space, it's like it's such a rapidly changing space. If you don't keep on iterating, then you're just going to quickly become irrelevant. MVHQ, I don't know how closely you followed our launch story, but we basically kind of came out into the market with a waitlist program. It's kind of just like this fun thing where you could share and get points based on who you were for. And it went fairly viral, I would say. And it was really interesting because we noticed everyone at the top of the wait list was all from the same alpha group. It was only two. It was MVHQ and it was Underground. And we're like, oh, what is this MVHQ? Hadn't heard of them before. And then we had a call with, I think it was Mitch and Jacob, and we had showed them the product, and they were really pumped to see it. And so MVHQ was actually the first group of people that we really onboarded. And I would say it was incredibly important. We loved all the feedback that we got from MVHQ. The interesting thing about the product is that the vision for the product has basically never changed from day one. Literally we have a sticky note, a digital sticky note from our first design planning, and the spec was we need a collections page to be able to browse all the different collections, in this table view with real-time data. We need a trading page, and we need a portfolio view. And that was the spec. And then it was everything needs to be real time. That was literally our day one spec. So we knew exactly what we needed to build on day one. But what's interesting when you kind of bring a product into market is that typically a lot of the theory needs to change as is actually in users' hands. So there are a lot of just little tweaks that kind of need to happen in order to make a product feel intuitive. And for that, I would say MVHQ was incredibly valuable to us because, the members are all very vocal and they'd be like, oh, this sucks, or this is broken, or this is not intuitive. And of course, how can you ignore that feedback? You need to make it as intuitive and smooth as possible. So I would say that's why we've always been, very grateful for MVHQ, because we've kind of feel like they were part of our story from day one, from that early waitlist program, right? They were the ones at the top of it.
Yeah, I mean, that's great to hear that. Also, never a shortage of feedback and thoughts in here. We're not necessarily always the most diplomatic crew, but we'll certainly give it to you exactly how we're experiencing it, which is pretty great feedback, I guess, if you're a product owner at the end of the day.
Yeah, I mean, I love it. I love it when the members like tell us like, oh, like Blur sucks for this reason. Like, obviously, the initial gut reaction is like, man, like I wish Blur didn't suck. But the best thing is like, wow, like okay, like here's like a very actionable thing that we can do to make Blur not suck. Like if we just like fix that thing, maybe they would say Blur is awesome.
Yeah.
So when people are complaining, like that's at the very least they care, right? Because like the worst thing that you can have as a product is indifference. Getting people to actually just like give an iota of a single shit is like really really hard. So the fact that people cared enough to even say like Blur sucks sometimes was something that we really were grateful for.
Yeah, a total win there. You're 100% correct. As long as they land on one end or the other and give a shit enough to say something, totally makes sense. All right, so let's shift a little bit. Something I love talking about a lot. That I know is certainly on your mind, others' minds. But token rewards, I love talking about that. I've spent a lot of time in the reward space even previously. I try to always leak it in on this show at various episodes, but it's particularly relevant today, of course. So, at what point did you have that as part of your plan, and what was kind of the initial thought process before you then formulated exactly what the structure would be, the phasing, all that kind of good stuff? Was that absolutely part of the strategy from day one? Was it after you kind of had the direction and it was just consequently the best user acquisition strategy that you came up with and the retention and all that good stuff? How are you thinking about that?
Yeah, it's interesting. Blur is unlike the normal. If you're someone who's like into startups and kind of like the whole like Silicon Valley like tech startup world, there's a very common trope of like pivoting quickly and like as you get out to market, changing your idea or changing your direction. None of that happened at Blur. Everything that we did was basically planned from day one, and we haven't had. And it's not to say that we're not willing to throw out all the plans and change things, but it's really like we haven't had to change a single plan effectively since day one. Even there was the product, like I mentioned before, where like the spec just like did not change, and then even the go to market. We always had planned on building Blur as a decentralized protocol with a token, where the token is what effectively governs the protocol and accrues value. And the reason why we wanted to do that is, I think one of the really cool things about Web3 is that the community can actually be given control of the underlying infrastructure in a way that's just frankly impossible in Web2. And when we were looking at the space, we're like, okay, OpenSea at the time, I think their last valuation was at like 13 billion. They were doing secondaries at like, secondaries is when people kind of like sell outside of the funding rounds. They can sell stock outside of the funding rounds in like private deals, basically like an OTC deal. And there were like OTC deals valuing them at 18 billion, and we're like, okay, this entire bag of value is just owned by a few people, right? It was like the 40 employees at OpenSea at the time. I think they have more now. But it's owned by like a few people, and it's owned by like A16Z and a few funds. And this entire network of people that's actually bringing all of the value, which is the traders, the buyers and the sellers, the collectors. These are the people that actually are what make this business run and work. And they don't actually get any of that value. What if we can give away half of that value, right, or more, and we would literally have the ability to give away, like, if you looked at like OpenSea valuation, it was like we have the ability to give away like $6 billion worth of value. Like that was kind of our thought process. Like what if we just took that value and actually gave it to the users? And that's something that you just like cannot do in Web 2. But in Web 3, because if you're able to build this infrastructure in a decentralized way and you have the protocol be controlled by the token, you can actually give away the token, and there's a lot of value to that. So that was always the plan from day one, and nothing about that has ever changed.
Yeah, that makes total sense, and absolutely, a perfect fit, of course, given the space as well. Maybe going outside of Blur to start as well, right? As you knew that you wanted to do that, there have been others that have tried some version of this before, right? Some within the marketplace landscape, some even beyond that as well. Are there any that stand out to you of like good examples, bad examples, things that you were able to pull from that was therefore able to direct your reward structure and phasing and how you thought about it?
Yeah, I think that there's one thing that's really interesting is, so we started building Blur 388 days ago, and this was around like mid-January. And if you remember that time, Gem was just launching like basically like in the following week, and then like LooksRare was just launching in the following week, and then X2Y2 I think was like 2 weeks after that or something around that time range. So basically, all of these players were coming into the market right as we started building. So we had a lot of catching up to do. We had to really sprint. And empirically we'd ship a lot faster than our competitors, but it was really a pain to be like, okay, wow, everyone is out in the market already, and we're starting literally from zero. Now that we're at parity in many ways, like there's still things that we want to do, but now that we're at parity, it's a very exciting opportunity for us, because like, okay, we can maintain the shipping speed and just pull ahead in a way that is just going to be pretty difficult for any competitor to contend with. And I think it's going to be pretty exciting for anyone watching from the outside to just see the rate at which we're able to ship and continue to develop the protocol and the product. But ultimately, something that we really benefited from, even though we started from zero when everyone else was coming into the market, was we were able to see, some of the things that worked for them and some of the things that didn't work. So like LooksRare, for example, I think they did an incredible job nailing the zeitgeist and using the token to get people into the door. But ultimately, their tokenomics was flawed in that they incentivized volume. And there's a very easy EV calculation you can do, right? It's like, if you generated this much in fake wash trading volume, you get this much in tokens back. And so what you got was, you didn't get real traders coming into the market and using their marketplace. You just had, arbitragers, maybe like DeFi people, maybe there's like a few bots, but basically they're just trading back and forth with each other, and they'll do that as long as they can trade profitably. So they had a system that gave them incredible top line numbers, but ultimately it didn't actually build up a network and get users actually onto the marketplace. So I think that showed us the power of the incentives, which made us very excited to deliver the incentives that we had in mind. But it also showed us the danger, which is that if you incentivize the wrong things, then you're actually just gonna basically be blowing a lot of dry powder for a net result of zero. So that was something that we really benefited from, just being able to observe that.
Yeah, that's a great example. I mean, so if you almost looked at it at a bird's eye view of what that curve looks like, right? It's like majorly compressed into the top, the acquisition side of things, as you said, maybe not with the intended behavior, and then just kind of a slide down from there, right? So
yeah, it's like you have a massively leaky bucket. It's like the bucket doesn't even have like a bottom. It's just it just falls. It's step function down, and that's an understatement. Yeah, that totally makes sense. So with that in mind, right? Then you have to take that lesson, other lessons, natural logic and intuition, and all those good things, to be able to build a set of curves and reward behaviors that you want to be able to drive. So like, how were you thinking about that as a result of that, in terms of like projecting out curves, the sustainability, which actions we wanted to reward? Like, what was your framework and thought process there? Yeah, totally. So, I think when you look at DeFi, there's a few examples, because a lot of the things that have been coming into the space in the NFT market, we're really just like a few cycles behind DeFi. NFT infrastructure in general is just behind tokens overall, from an infrastructure perspective, from a like tokenomics perspective. So, for example, like tokens started trading on Mt. Gox and Coinbase, very retail-driven platforms. But then now we see the majority of the market is on these more pro-institutional level platforms like Binance, BitMEX, Deribit. There's more financialization, and that's where the market has shifted. And as the infrastructure developed, the space was able to grow much, much larger. But NFTs, even prior to Blur launching the bidding system, it was like you really only had listings. And so it's just like you had like a spot exchange with only one side of the order book, and you couldn't even visualize the buy side of the order book, right? No one really had this like bid order book until we released it. So in general, the infrastructure and tokenomics and everything is somewhat behind the token market. And that's not a knock. It just shows, NFTs really only had their coming of age moment in the 2020 time period, right? That's when it really kind of like popped off. So there hasn't been enough time for the infrastructure to really develop. And one of our primary goals is developing the infrastructure and tokenomics so that the space can just grow a lot larger than it is today. As we saw the space grow for tokens significantly, once this infrastructure was developed. So, to kind of go back to your incentive question, if you look at what's been tried in DeFi, incentivizing volume is pretty much never a good idea because it's just way too easy to game. You get wash traders; they're not real users. A protocol that I really admire is Curve, where if you look at how Curve's incentives work, you don't actually benefit at all from trading on Curve. You only are ever rewarded for providing liquidity. So our number one rule was never incentivize volume, only ever incentivize liquidity. And if you look at how we did our airdrop system, right? First we incentivize listings and then we incentivize bids. It basically followed that framework.
Yeah, that makes total sense, and that actually ties in very, very well, to a question that we have from somebody in our audience as well, which is, like you're saying, right now it's very, very focused on bidding, which makes sense, right? It's an innovation, it's logical, it's the action that you actually want people to take, right? It's a creative, it can't be gamed necessarily, right? Like all those good things. But as we go on from here, right, not just with the actual people who can bid, but of course listers as well and beyond, there's many ways and actions like that can be rewarded into the future. So, I mean, how are you thinking about that moving into the next phases, let's say post Feb 14 and on? Like, how are you thinking about that? Should we expect it to evolve with a wider variety of reward actions? Like, how are you thinking about that in general?
Yeah, I would say, there's not much that I can share right now because we typically keep things pretty close to the chest until we're ready to release it. But in general, I would expect it to evolve.
Yeah. Okay. That makes total sense. Yeah. One other question too, and you don't have to give, certainly specifics or thoughts or either, just conceptually more than anything. One of the equal challenges that exists with this too is ensuring that there's, kind of like the expanded version of what you were describing earlier when you were talking about Gem, for instance, right? Which is, Looks Rare, for instance, right? Which is, in their case, very, very compressed, lots of initial engagement, but then kind of the big drop off afterwards. As you said, not a leaky bucket, just like an empty bucket at the bottom kind of a thing, right? This is obviously not that, right? It's a lot more thoughtful. You're, rewarding the right actions that totally make sense. One of the challenges with that, though, is like the prognostication challenge as it relates to as it intersects with several things, not just like with what you're doing here and what the goals are, with what's going on in the macroeconomic environment and beyond, and having to figure out how far out you have to extend the curve and think about it. You don't have to give an answer in terms of what it is, but how did you think about that at all to figure out, right? How long are we extending out the curve for? Where do we expect the value of rewards to be at certain points? Like, what was your thought process on that?
Yeah, I think. Would you mind repeating the question because I'm not sure I quite understand the question.
Yeah, sure. So what I'm really touching on now is the fact that the curve, right, whatever you're incentivizing and rewarding, has to go out for some period of time, so that we don't have the effect that you said earlier, where a bunch of users come in and get acquired and then they drop off. We need to make sure it's sustainable, right? And that there's the appropriate rewards now, next stage, into the future, so that people are continuously motivated, right? That it's a renewable, sustainable activity. So how did you think about that, knowing that there's a lot of unknowns that exist in terms of when is the macro economy going to repair? How do we expect user adoption to go? Things like that. Does that make sense?
Yeah, I think that. What's really interesting about Blur is that all of the adoption and growth that has happened, and not just from a market share perspective, where, just even in the past week alone, Blur has done 26% more in volume than OpenSea. So there's a market share perspective, but then there's also just a volume perspective. The protocol has done around $500 million in monthly GMV for the past 30 days. And that's to me, that's a gargantuan number, and that is massive. And that was all accomplished in the depths of the bear market. This is the worst bear market that I've ever seen in crypto. after, FTX basically rugged the entire space, and you have all of these massive institutions collapsing, and these institutions were a huge source of liquidity in the space, and it all kind of cycles, right? You have institutional liquidity cycle into DeFi, and then it cycles into NFTs. Like, it actually really affects the market. The fact that all of this growth came in the depths of the bear market is an incredible signal to me, because we know that crypto operates in market cycles. We know that it goes through bull and bear cycles, and every bull cycle is usually multiples larger than the prior bull cycle. And right now we're around 1/8 of the prior bull cycle. So the upside from here in terms of a market growth perspective is just pretty mind-boggling to comprehend. And when we think about what does that mean for Blur, and also the ability of Blur to incentivize, it's okay, if Blur was able to utilize dry powder to create this system in the depths of the bear market, and it worked this well, then the ability to utilize that in the future only grows, because this is like the hardest time and period in order to do anything. So the fact that anything worked in this like incredibly atrocious bear market, as the market turns around, it just means that there's the capabilities of driving behavior just grows even greater. So hopefully that kind of gives you a sense of how we think about it. We really think it's like this, the hardest part was already done, and now it's just thinking about the potential from here is just really incredible.
Yeah, that makes total sense how you're thinking about it, and I think it's a great framing. The fact that one, there's still tons of responsiveness in the space, and yet it's still getting validation, and people are attaching and sticky and all those good things. So that totally makes sense. I have another question from our live audience as well, which is about the royalty wars side of things. So, OpenSea versus everyone else being like the construct that kind of exists. So the question from the audience, and again, feel free to answer however you feel comfortable. How are you looking at Blur's ability to generate revenue long term? And I think that, of course, ties to royalties. Is it, and goes on to ask, is it royalty based at all, or is it more focused on premium tools and data? Again, I know that's like, semi-proprietary kind of a thing. However you feel comfortable answering, of course.
Yeah, what's really interesting is if you look at every Web2 marketplace or token exchange, or any sort of like market in general, the platforms that facilitate the trades, there's a very, very clear business model, right? Like if you're a spot exchange, you can just charge a take rate on each trade, and that is like a very tried and true business model. I think something that is most people don't know is that Blur has already tested out its ability as a protocol to introduce pricing, because we already started enforcing minimum royalties starting January 1st. So prior to January 1st, Blur, it was actually very easy to do like a completely zero fee trade, right? Because Blur as a protocol doesn't charge any fees, and then it had incentivized but completely optional royalties. And so you could actually just like wash trade if you wanted to. And one of the things that we wanted to do was we wanted to actually understand, like, okay, is this, can we actually disprove the wash trading thesis? And we looked at it from multiple different angles, right? Like one is we never incentivized wash trading directly, but can we also introduce changes that would indicate and punish wash trading? And so we added a minimum 0.5% fee on January 1st. That doesn't go to the protocol right now. It goes to the creator. But what we saw was that our market share actually not only maintained, but it even grew after that. So that indicated to us like, okay, there's real pricing power here, because it's not like if you're a trader or a buyer, it doesn't matter to you whether that fee is going to a protocol or to a creator or literally getting burned. You're still just getting, it's still just a cost at the end of the day. So the fact that we did that, and then if you look at Blur in terms of the fees, it's doing $100,000 to $200,000 in fees per day. That is the most exciting thing to me, is that, okay, there's like real usage here. People are spending real money, and that's demonstrated in this fees. In terms of, how those fees are enabled for the protocol itself, that's something that, we actually think that like one of the valuable things about tokens is that you can actually give the token holders control over that. What matters though is not actually doing that immediately per se, but having the ability to do so. When you look at Web2 marketplaces, there's a very good analogy here. If you look at Taobao, for example, it's a massive, it's like the eBay of China, basically. It's a massive, massive business. I think it's probably larger than eBay, honestly, but I would need to double check that. But they were competing against eBay, and their strategy was they launched and they had no fees at all for the first 3 years of their business. And this is a Web2 business, right? And not a Web3 business, which typically has, a lot of like funny money shenanigans, but this is like a Web2 strategy. And then eBay very famously, they're a public company and they're like, we're a public company, we're a legit business, we're going to charge fees, and we're a healthy business, so we're going to do that. And then Taobao outcompeted eBay among multiple dimensions, not just the fees, but they utilize fees as just another bullet in the competition. And then they had no fees for 3 years, and then they turned them on afterwards. And then now Taobao is a massive business, and that was a strategy that they implemented 20 years ago. So and that was prior to this general like meta understanding of, if you actually build a business, what matters is not the near-term revenue, but it's the long-term revenue potential. And when you think about the growth of the business, any revenue that can be accumulated in a bear market is literally going to be pennies compared to revenue that can be achieved in a bull market. And so what matters is not earning revenue in the short term. It's, do you have the ability to earn revenue in the long term as the market grows and as the bull market comes back. And so that's how we think about the fee issue. And the number one thing there is like, do you have the ability to earn that revenue? And that's why for us, enforcing the minimum royalties, it did multiple things, right? It was allowed us to extend an olive branch to the creators so that they could get more revenue, in this bear market. But then it also gave us confidence that the protocol has the ability to have pricing power effectively, right? To charge fees and a take rate in the future. And, I know this is an incredibly long-winded answer to something that was pretty much like a short question, but I think any question you ask me is going to get a long answer because we think a lot about this, and this is just how we think about, how does a protocol accrue value and have the ability to accrue value in the future.
No, we love the long answers. It's good. It really shows us your thought process, and I'm sure the crowd definitely appreciates it. I guess the related question to that then is, where do you think the landscape is going to go for marketplaces moving forward, right? Like with you guys coming in and disrupting and thinking through, a feature set and a set of user requirements that are needed for all the things that you learned, right? And now being flexible enough to be able to adapt as well with your team and in general. And then we have the incumbents that already exist, OpenSeas and, some of the others, and you had Coinbase trying to poke in and all that stuff. Where do you think that's going at the end of the day, if you had to say? Like, do you think that they're going to be around, but it's going to become a more fragmented market over time? Do you think it's going to land at a place of a few players who are just the powerhouses, and that's because it's reliant on so much two-sided traffic, almost much like eBay has done for a long time, as you said, or, funny example, but similar to eBay, right, in the US at least. Is it going to head in the direction of that marketplace or that landscape dynamic where it's a few big players who just have so much volume and flow that nobody can go anywhere else? Like, how do you think that's going to pan out?
Yeah, I think, like I mentioned before, I really think there's only two segmentations that really make sense. And the NFT market is so early that you don't really get, in the token market, it's like you have the retail exchange, right? Coinbase, you have the pro exchange, Binance, and then you kind of had even more segmentations amongst that pro market. You have, like more like institutional grade providers versus like more like a prosumer type user. But we're not really there yet. Like we don't really have like institutional players in NFTs right now. But that's a trend that, what we've seen is that the markets, as they professionalize over time, you get more and more demand on the pro and institutional side. And actually, when you think about where does the volume comes from, the majority of the market activity typically comes from those as pro users and those institutional players. So what we're expecting is that the market will continue to professionalize, but ultimately, I don't think that this is something where people. I typically try not to take market bets or to like publicize market bets, but when it comes to like how does the market segmentation happen, I think it's really only retail and pro. When you look at the Web2 marketplaces, it's pretty much impossible to actually overcome an existing marketplace's network effects once it's saturated a market. So like Craigslist, for example, they haven't changed in 20 years and they still do $1 billion in yearly revenue. That is like a crazy number for a product that like literally hasn't changed and has had so many competitors try to chip away at their business. Ultimately network effects are something that are incredibly powerful, but also incredibly daunting if you're trying to overcome them. And you really need to go after a specific segment that is underserved. In NFTs, that underserved market was the pro segment. And ultimately, now that Blur has, in many degrees, achieved saturation amongst the pro segment, it would be incredibly difficult for anyone to create an alternative to that. Just like it would be incredibly difficult for anyone to create an alternative to OpenSea for retail. And I frankly don't think that it'll happen. I think OpenSea will continue to be very dominant amongst retail, just like Coinbase is very dominant amongst retail. But of course, the majority of the market professionalizes and moves elsewhere, like we saw with the token world with Binance. Now their business is much, much larger. And that's the same trend that we see happening for NFTs and Blur.
That's crystal clear. How you're thinking about it makes total sense. We carry the market a little bit forward though, right? And like it makes sense, the segment that you focused on and the thought process, that makes total sense. If it's proven out though, right? Like we have to imagine that like maybe the Coinbases or whomever else will try to go somewhere into the pro category, or maybe even another category as well. Do you think that's possible for them? Are they nimble enough? Again, I'm not pointing at Coinbase just as an example, but are they nimble enough to do this? And equally, if they do this, is this actually a net good thing for Blur in this case? Because it's like a pie expanding thing instead of just like a stealing share competitive thing necessarily?
Yeah, I think, again, there's just like a lot of historical precedent that you can look at that really just kind of gives a sense of like how this can all play out. A great example of this was when Amazon was competing with eBay. At one point, they wanted to launch a similar business to eBay, right? Being able to sell like collectibles, peer to peer. And Amazon was like the hottest company in the world at the time, like just could not stop winning. And they launched this competitor to eBay, and they like shut it down months later. And the reason why is ultimately it doesn't matter how big the business is that's coming in. The network effects are just incredibly difficult to overcome. You can't, it's just like, it doesn't, at the end of the day, like if someone's buying and selling, like they don't care whether the marketplace is Coinbase or Amazon or wherever. No. They just care that there's liquidity. They care when they list, right, that there's someone that's going to buy it, and they care that when they buy that they're buying at the best price possible, and that having a brand name doesn't actually change that. So I think that for us, when we think about that development, it's something that we're actually very excited about, because something that these players do have is they do have a large brand name and reach, and it would be incredible for them to actually put in the effort to educate larger swaths of the market on the space, because ultimately we don't really expect them to be able to retain and build up that network effect. I just think that would be, never say never, but I just think that would be very unlikely.
Yeah, that makes total sense. I'm curious to, with the few minutes or so that we have left, I'm curious to just put your attention also on the, like the buying trend side of things and like the meta side of things from a purchase and collecting and trading side of things. What is your perspective there? Like we kind of find ourselves right now at this point where, certainly, PFP and membership-based NFTs have been a thing. We've had some Web2 come into the space, right? We've had games which did not exactly work out well the first wave, I would say, in aggregate within Web3. A couple other categories I'm probably just glossing over. But where do you think that's going to go? Like, do you think that the next wave, let's say if we push out like a year, is it going to be more pragmatic utility-based use cases that exist that cross over to like real life where there's scarcity that exists? is going to be more of the same kind of categories? Like, I don't know. Where do you think that's going to go? You have a thought?
Yeah, I think, the main thing that we really focus on at Blur is we're building something that's in such a new space. We can take the risk on the technology and make sure that we can build the technology. But what we don't want to do is we don't want to have to make a bet on human behavior changing. And actually, the thing that's most compelling to me is being able to bet on human behavior that just hasn't changed at all, since we've basically existed. And one of those human behaviors is just our propensity for collecting things. If you look at eBay, when they IPO'd, actually a large majority of their volume was the secondary market for collectibles. Ultimately, the main trend that we see that NFTs solve so well is just, it's like Reddit really nailed it. It's like these are, digital collectibles. And whether it's an 1155 or an ERC721 or art, there's just something core to, I think, the human existence where we just really enjoy collecting things. Ultimately, I think that's the main thing that we try to bet on at Blur is that on that trend continuing. And it's like Lindy, if you're familiar with that concept, like the human behavior and desire to collect things is like very, very Lindy. It's been around for millennia. So in terms of like what pops off, I think the meta will change, continue to shift, right? There will always be like a flavor of the week. I think the core behavior driving it is always going to be our propensity to collect things though. And so that's ultimately the main thing that we really focus on is, okay, when someone wants to collect something or when they want to exit their position, is Blur the best place to do that? And as long as we nail that, then we're not as worried about the specific trends because we know the core behavior is going to be the same. But that also means that from a protocol and platform perspective, we need to be able to, support all the assets, right? So it's like right now, Blur doesn't support art blocks, it doesn't support 1155s. So that's something that we'll be focusing on to, quickly build out that foundational breadth.
Yeah, that makes total sense, and certainly appreciate the flexible approach, the platform based approach that you're taking, and making sure that it is flexible. It makes total sense. So I guess my curiosity question that I have is, so up until this point, you guys have done just an awesome job, of course, on the product and development side of things. Used very kind of Web3 centric approaches as it relates to user acquisition and retention, focus groups, feedback, all those kind of good things, right? That Web3 is known for being able to do. Probably far better than Web 2, I would say, in most cases. Should we expect at some point, or do you think there's going to be a path at some point where, we're going to see, Blur ads leaking out into the Web 2 world and either digitally or in other places? Do you think there's going to be like a marketing push to be able to expand and educate and that sort of thing? Or would you expect that, continue within, the Web 3 world, similar user acquisition, feedback, experience? Where's your head at there?
Yeah, something that I really admire about the best DeFi protocols is I think that one of the really cool things that token holders can do is allocate capital. And of course, being able to allocate capital means that you're able to allocate human capital and energy towards initiatives. MakerDAO now is spinning out all of these sub DAOs towards various initiatives. So it's not even necessarily like a core maker team. It's like it's a very like a decentralized manner. It's like almost like a normal corporation, but it's more like almost like a holding company in a way, like Alphabet in a sense. And the token holders are able to kind of vote and create these sub DAOs. I think it's a very interesting experiment. But when I think about Blur, if there's an initiative that makes sense in the future that can grow the market and grow Blur specifically, I think that's something that the holder base, because it's the story of Blur prior to token launch and after token launch. It's going to be very different because after token launch, the holders really get to have a lot of influence in how development is done and also in how capital is allocated. So I could totally see a world where someone submits a proposal to run like Blur ads, right? Or to get like Blur billboard ads. And if they do well and it works, then they can submit another proposal and they would get more budget for an even bigger campaign in the future, right? Not saying that like that's exactly something that would happen, but it's just I could totally see something like that happening. And the really cool thing is that the holders would actually be able to participate in that decision and make a call there. And that's just something that you just really don't get in Web 2.
Yeah. I guess relating to that, maybe a last question before we wrap. Your current team, right? Is where this conversation, started and kind of where we went is, you had it written down on a Post-it note. You knew what your vision was and your thought process and philosophy as was the team's, and you kind of adhered to it, right? It didn't have to waver much, which is the thing. Obviously, as you said, post token release, that's going to change, right? Governance is going to change at that point. How is your team going to intersect with that? Like, what are your governance rights going to be as related to that? How are those two things? How do you envision those two things intersecting? Both the vision that you had in mind and the fact that the landscape hasn't changed much, especially for this pro trader, but also, of course, the fact that governance is going to be, a part of this as well.
Yeah, totally. Again, I think that if you look at DeFi, there's a lot of protocols that are experimenting with different models to varying degrees of success, and some of it is quite inspirational. I think the optimal model is, you have a protocol that's controlled by the token holders. That's the most important thing. And then you can have effectively a decentralized network of contributors and contributing teams. If you look at like Optimism or DYDX or Uniswap, they have all these like labs entities. I don't know if they have a singular one or if they have multiple, but there are separate teams all focusing on different efforts, and that's like separate even from like the foundation administration. And I think that is a really optimal model where you can still have contributors that are really pushing hard because they, just like the community has a stake in the network and they want to see it succeed. It's just like an NFT in a sense, right? Like once you have your PFP and you really have an identity with it, you really want it to succeed. So you put it on your Twitter, you promote it, you tell people how great the community is, et cetera, et cetera. These are all things that having a diversified base of token holders also enables. And that's true for community members at large, and of course for core contributors too.
Yeah, that makes sense. Okay, one last question, and then we'll wrap. It's a quick one, and again, if you can answer it, if you can't, that's totally okay as well. From our crowd, Scott Post asking, can you share if there will be token staking on the day of the Blur token release? Is that something you can share or talk about? Not okay?
Yeah, we're going to release the tokenomics and governance forum and website and everything like that, all on the day of launch. So it's all going to come out at the same time. I will say, in terms of general philosophy, though, I think there's a few things that are important to consider when thinking through token design. Number one is you want to make sure that you don't implement bad token design. So incentivizing the wrong things or having missions that don't actually do anything, that is very detrimental, because now you're spending money for no gain, which is just a horrible use of capital. You want to make sure that when you do spend money, and I'm saying you as in like a protocol in this case, you want to make sure that it's actually delivering value, net value to the protocol. But I think the other thing that's really interesting about the current meta is, again, bull and bear markets are very different. We're currently in a bear market. And in a bear market, there's more of like a return to fundamentals than what I've seen, not just in like the individual participants, but especially for institutions. And these are the people that actually have large swaths of capital to allocate, right? Like institutions are the ones where it's like a single decision maker can decide whether they want to allocate $100 million into a token or not. And that's not something that like a normal individual would have. So when you think through like how do the institutions think about markets, there's very much a return to fundamentals. And what works in a bear market is very different than what works in a bull market. In a bull market, there's more room for experimentation. People are down for all of the crazy and creative schemes that can really just make things rip in a way that's pretty mind-boggling. And I think what's really important is maintaining the flexibility to have creative tokenomic schemes in a bull market when the market shifts like that. But in a bear market, something that's been very important to us is actually making sure that when an institutional capital partner is evaluating the protocol and is deciding whether they want to take a position or not, they can actually reason about and understand the value of the protocol in a very fundamentals driven way. And if they're able to do that, you want something that is going to be familiar to them. So, without revealing too much, just that hopefully gives a sense of how we think about it. We think about who the holders of the token are and who allocates into the token. It's not like NFT traders. It's not like individual DeFi people even per se. It's, the largest swaths of capital are the institutions, and when they want exposure, they want to be able to understand, what it is that they're getting.
Yeah, no, that makes total sense. So yeah, thank you for sharing that and being really kind and thoughtful with your answers and thought process and all that good stuff. Really, really awesome episode today. So thankful to have you on and hear everything that you've been thinking and your theses and all that good stuff. To the live crowd, really appreciate you like always. The great questions today, as always. And just the general support and feedback. And to anybody listening on recorded as well, you are also appreciated. So thank you so much again. Really appreciate it, Pacman. Really looking forward to the progress of your project as well. And for everyone listening, we'll see you similar time next week. Thanks so much, everyone.
Thanks for having me.